The star is the maven, we call her, because always adding value in the chat. Leslie, you dropped a bomb on us like as we were starting this thing, right? This idea that you have been 28 years, four different markets, and you have now whittled it down to one market. You want to tell us a little bit about that backstory there?
Sure. I started in 1996. I was living in Phoenix, Arizona. And how I got into this is I had a friend going through a divorce. And every state's regulation for real estate is different. That was something I didn't know. I thought real estate was real estate. But in Arizona, the day you go to the title company, not the lawyer's office, to close, everything has to be transferred over, the utilities, everything. So when you sign on the dotted line as a buyer, you get the keys and you can move right in. So my friend had moved out. She was getting ready to close. And one of the things title companies do is they call up the employer of the buyer and they ask, is Harvey still employed there? Well, when this happened to my friend, they found out that Harvey had quit his job on Wednesday before his Friday close. So all of a sudden, her sale blew up and
Mm.
she called me in a panic. And I said, look, if you knock $10,000 off the price, I'll buy it. So I was an accidental landlord just trying to help out a friend.
Mm-hmm.
And, I had a good job. I didn't really think about it. My friend was so grateful. She found a tenant, and that's how I started. And then what I found out was that when I did my taxes the next year, it cut my federal income tax bill in half. The depreciation deduction that you get with rental real estate. Well, that got my attention. Meanwhile, due to I worked in high tech, I worked for Aero Electronics, electronic component distributor, I got transferred to Denver. And so I thought, oh gosh, I don't want to try to manage out of state real estate by myself because really real estate is a team effort. It's very hard to do it all by yourself. So I just assumed that if I rolled the money over into a new house in Colorado, I could just keep going the way I had been going.
Mm.
Well, unfortunately, nobody had told me about a 1031 exchange. So
Mm.
because I touched the money, I got the opportunity to pay $20,000 in capital gains tax.
Oh
So you
man.
only make mistakes like that once. Once you learn them, yeah, I've done 231 exchanges since, never made that mistake again. But Phoenix is a boom bust economy. Denver, where I live now, is more of a steady Freddy economy. And there's two kinds of markets. There's an appreciation market where the rental income that you get every month is less than 1% of the purchase value of the house. Jacksonville is an appreciation market. But then there's other areas like Detroit where they call that a wholesale market, where the rents are greater than 1% of the purchase price. So I started investing in Colorado, loved it, was able to time the market, I think, pretty much perfectly. Because one of the things you have to do is watch the economic cycles because things go up, things go down. I used to follow a guy named Harry Dent, who was a demographer, and he caught my attention in the 90s when he predicted the Japanese economic collapse due to their demographics. And he also predicted pretty closely the housing bubble.
Mm.
And so I was able to kind of time things pretty well from him. Now he's gotten very doom and gloom and he just keeps predicting this crash, which I don't think will happen. But
You
he's
should come. You should
71
come on the
now.
quarterly update with us.
Yeah, he's on the real conservative side of his life. You're
Uh,
more aggressive when you're younger because you've got time to make up for any mistakes that you make. As
uh,
you get older, you become more and more conservative and resistant to change. So one of the things, if you're older, on the older end of things, I would say surround yourself by young people because they will keep you current. But anyway, I thought in 2014, because I'd gotten used to the housing bust prices, I thought Denver had gotten too expensive. So I jumped into Detroit, which was a
mm.
wholesale market. And oh my goodness, what a different culture, different environment. So anyway, I could buy 5 houses in Detroit for what one would cost in Denver. So I thought I was diversifying my portfolio. No, I wasn't. I was getting a very good education in what not to do. And so I joined Fortune Builders because I'm always looking for new information. And that's where I first heard about Greg. But because I just had this disastrous experience in Detroit with property managers who would lie, who I just can't even tell you all the horror stories. I wasn't ready to invest with Greg when he first started talking about his build to rent strategy. So I watched him. And then I found this podcast in 2020 during the pandemic, and meeting here every week gave me the confidence and the familiarity with Greg to finally pull the trigger. And so what I did when I saw interest rates go down to the 2.5% range, I thought, this is the bottom. So I did some cash out refinances on two of my most expensive rentals here in Denver, as well as my own primary residence. And I got about $500,000 worth of cash. And then I went shopping at JWB. And so I bought 5 properties right away. And then I've just been trying to add to my portfolio slowly as I can.